File photo. A Canadian dollar coin, commonly known as the loonie, is pictured in this illustration. Picture taken in Toronto, January 23, 2015. Reuters. Mark Blinch, Toronto. Reuters. The Canadian dollar suffered its biggest drop in 8 months against the greenback on Wednesday, while short-term bond yields fell after Bank of Canada Governor Stephen poloz dampened expectations for further interest rate hikes this year. At 5 p.m. EDT 2100 GMT, the Canadian dollar CAD-4 was trading at C$1.2478 to the US dollar, or 80.14 US cents, down 1%, which was its deepest loss since January 18, when the central bank had said a rate cut remained on the table. The currency's strongest level of the session was C$1.2336, while it touched C$1.2483, its weakest since September 1. "It's been a pretty tough day for the Canadian dollar," said Jimmy Jean, senior economist at Desjardins Capital Markets. The big driver today was the poloz speech, which the market quickly labeled as dovish. Poloz said the central bank will closely watch movements in longer-term interest rates and the exchange rate as it considers how to follow its two recent interest rate hikes. "The mention of the currency is the big takeaway," said Eric Thierot, currency strategist at Scotiabank. The loonie has rallied nearly 8% this year. A further rapid appreciation of the loonie could put the brakes on the country's economy just as it is gaining momentum. Chances of another Canadian rate hike this year fell to 81% from almost 100% before the release of poloz's remarks, overnight index swaps data showed. Backwatch losses for the loonie came as the US dollar.DXY rose to more than a one-month high against a basket of currencies, as optimism about US fiscal reforms boosted sentiment in favor of the greenback. Prices of oil, one of Canada's major exports, edged higher, helped by an unexpected drop in US crude inventories. US crude CLC1 prices settled 26 cents higher at $52.14 a barrel. Canadian government bond prices were mixed across the yield curve, with a 2-year CA2Y TRR price up 4.5 Canadian cents to yield 1.583%, and the 10-year CA10Y TRR falling 17 Canadian cents to yield 2.134%. The gap between Canada's 2-year yield and its U.S. equivalent narrowed by 4.9 basis points to a spread of 10.4 basis points. Reporting by Virgil Smith, editing by Paul Simao and Phil Berlowitz.